Hello traders, this is Chris from AAAFx taking a look at dollar yen. Pretty rough day for the dollar as we find ourselves closer to the 147.5 level at the end of the day. A clustering area. I am drawing a previous resistance level that has cut through for support right here. We'll have to wait and see. If we break down below the hammer from last week that made the lows, meaning that if we break down below the 147 level roughly, that could kick off an even deeper correction. And really, while I'm not necessarily too keen to short this pair, it's not really out of the realm of possibility. All one has to do is zoom out, and you can see we've had a couple of deep corrections along the way, and it's been a while since we've had one, so maybe we're just due. Double top up here at about 152. 152 is the golden prize for the bulls, because if they take that out, you're going to have people just running for the hills trying to get some type of protection that shorted this market. Some larger firms are starting to talk about buying the yen because they think the Bank of Japan is serious. They're not serious. They're serious about jawboning the market down. But once you understand the mechanics of the JGB markets, you understand that the Bank of Japan still owns a majority of bonds. So in order for, long story short, in order for the yen to truly appreciate over the longer term, that means that they would have to let the bond market float. They've been buying the bonds, driving yields down. Thus, you get paid to hold on to dollars against the yen. But what happens if they let the bond market function as it should in an open market? Yields will spike out of control. Quite frankly, there have been days in the last year or two where there's literally been no bids in the Japanese government bond market. So they are in a predicament. If they let yields rise too quickly, then the overwhelming debt in Japan becomes something that the government just can't keep up with. So they are between a rock and a hard place. Now, that's not to say that we can't pull back. It's not even to say we can't pull back to the 200-day EMA, which would be another 400-point drop roughly. But at this point in time, I'm not willing to short the market. I don't know that I would jump in with fresh longs here. If we could clear 49.80, 149.80, it'd be very bullish. If you wanted to drill down to a short-term chart somewhere above 148.5, you could get long in anticipation of that. But I would be very cautious at this point. If you want to short the US dollar, you're probably going to have better luck with stronger currencies such as the British pound, for example.